Okay. Do you have any questions though for this week?
I was going through the reports, so it's just run the reports as they are and answer the questions about the reports in the Excel forms, like transfer all of those reports in one Excel worksheet, work paper, like document.
Yes. Yep. So it basically follow the instructions and it will tell you how to run the different reports. And then it asks questions at the end of, what do you understand from the reports? What do you like? What advice or what kind of consulting would you give to this company, or would you say to this company based on the reports?
Okay. I'll try to do that. So it's just like analyzing the numbers and saying it's going well or not so well, or
Exactly. Yep. So is it going well? Is it not going well? What would you say is going to happen? Don't get too worried about like actual, don't get too worried about the answers because they're so general, the questions, that the answers are going to be very general as well. So I'm not going to grade the answers harshly for the questions. So, because really any kind of understanding you would see is like there's been decrease in sales or increase in sales. We're going to need like control expenses more, or increasing, like your income is increasing faster than the sales, or just whatever you can see based on the numbers is what you could answer with. But the numbers are going to be based on what's been produced. And like the July budget should be pretty uniform based on what numbers we've created, if that makes sense.
Okay. And there are no like PDF reports to compare to see if I got them right or wrong?
No, there are no PDF reports, but I can share with you the answers here, and then you can review that against your numbers. And then again, I'll post this on YouTube. So as you're doing your numbers, you can go in and look. But it gives you your trend line, your July budget, the percentage of income. And essentially this number, the percentage of income, should be based off of, your total income here. It gives you total sales, negatives here to get 100% income here, and then everything else is based off of that number.
So that graph is based on those last two columns?
So this graph is based on the trend line of your total income. So essentially you take your income, and it'll give you this income number. And then this trend line right here is an Excel formula or an Excel function, and it will give you this trend line. And I think it has that instructions in the PDF of how to create that trend line.
Yeah. Okay.
And then it's nothing too crazy, but report 1 gives you the year-to-date percentage of income. Report 2, essentially creating this July budget with percentage of income, and then this total trend. And then year 3 is essentially, or report 3 that I have is essentially the numbers of where I got my total July budget, or doing the July budget here. It's based off of my numbers here. So,
Okay. I haven't
kind
done
of
far.
controller level or CFO level work of, you know, now that we've looked at how to put the numbers in, what do we do with those numbers?
Mhm.
That's what we're doing. Well, let's try to plan what we're doing and how to manage cash flow, how we're managing our working capital. We're going to have an X amount. We need to prepare for next month's sales. Our sales are going to be more, so we have to order X amount of orders, and try to, you know, predict going forward. And that's kind of where it starts getting fun
Hmm.
of what we're doing.
So that's what an accountant do, like the reports and analyze the results.
Exactly. Yeah. So in my opinion, there's certain levels of accounting, right? We have the bookkeeping, which is essentially data entry and making sure the numbers are correct. We have the accounting, which is, you know, making sure accounting and controller work is making sure the numbers match all of our bank activity and our amortization. We go to more of the high level stuff of depreciation expenses, reconciling our loan amounts, reconciling our general ledger, our sub ledgers, and then additional level is, and then a part of that is our tax, you know, liabilities, making sure we're up to date on our covenants and our taxes, and we're reporting properly to the government and the states. And the CFO level is more, well, how do we cut costs, and how do we, what's coming in the future that we need to prepare for? What kind of economic situations that we need to foresee to plan for? So there's an economic downturn. How's that going to affect our company? How much cash do we have to have on hand to get through this rough time? You know, all these different planning. So there's different tiers of like accounting.
Mhm.
And so far it's been mostly bookkeeping and kind of senior accountant level of putting in the entries, making sure the entries work, making sure the balance is balanced, reconciling. And this is getting in more to the controller, analytics, things like that, of where are we going? What do we need to prepare for? What's the outlook look like? And this is a simplistic model where it's just based on historicals and nothing like with playing with the numbers of, well, if we sold X amount, this is what it would look like. If we hit this target, this is what it would look like. If we don't hit it, this is, you know, we get more into that FP&A, finance, planning and analysis piece outside of accounting. But it's all still numbers in spreadsheets.
Yeah. Okay. Now, like I had a question, like on the reports, not on the reports, but on the, well, yeah, on the reports. So if like in the class we have the PDFs to confirm if it's right or wrong, but how do you do in real life? Like you don't have that to base if your job or the data entry person did correctly, or how do you check if it's done correctly?
So a big piece is reconciliations, and you would reconcile all your subledger and like your bank account, and that's going to take care of a lot of ensuring that your numbers are correct. So as long as you've reconciled all your credit cards, reconciled all your bank accounts, reconciled your payroll activity, reconciled your timesheets, you know, to hours, and making sure that reconciles. And that's all part of like a month end checklist.
Mhm.
And then it comes down to like internal memos or processes or gap things that have come out, or pronouncements. And that's more of a review, making sure that like if someone paid a bill for utilities, that's showing up in your utilities account. Or if someone goes on a trip and you know someone went on a trip, but that bill has never come in, then you're looking for it and you're trying to understand, well, where did that hit? If it didn't hit our bank, did it hit our credit card? If it didn't hit our credit card, when will it hit our credit card? And a lot of it's, you know, just internal knowledge of what's going on in the company, and making sure you understand what's going on to make sure your financials match that. So I hate to say there is no right or wrong, but a lot of it's just making sure you're capturing all the information and then reconciling against what you do know.
Okay.
So
Okay.
yeah, you're never going to have, this is what it should be,
Mhm.
but you will have, you know, this is what you think it should be. And then you can essentially review all the transactions in the sub ledgers to ensure that that's what it is. And that's what auditors do. They look at one line item, you know, they would look at payroll expenses and they see the $14,000 a month, and they say, well, can I get all your backup and the details, the individual transactions that make up that amount? So you'd produce your payroll documents, whether that's coming from a system or your own payroll documents. You know, in this case, it would be that journal entry in the backup saying this person is owed this much. We calculated our FUTA and SUTA like this, and our Medicare and FICA and everything like this, and this is where we got the numbers. And they would review that and say, okay, that matches your bank, that matches the expense, you're good. And yeah, the auditors take sampling sizes of different transactions, and that's how they verify the numbers. But again, it's possible that it's not perfect. But there are times that if you put it in the wrong expense, then they'll call that out. Like, you know, if you paid, I don't know, if you threw a party and it cost 10 grand, and there's, you know, 5,000 of that was just for food, but you put that to rent expense or travel expense or some other kind of expense, they would say, no, that's not right. You need to put it to meals and entertainment, or you need to put it to meals. And some, depending on what size of company you are, will depend on like how strict you have to be with your expenses and your coding and your accounts. As you get into SEC regulated companies, there's clear guidance on the majority of the things you're doing. Smaller companies, it's basically based on tax law and tax rules. So there's a wide range of what you're going to do and how you're going to do it based on the end user of the accounting.
Okay.
So that was a long answer to probably a short question.
No, that's okay. Yeah, because I was thinking, how do you do it in real life? There is no comparison point to know if you did it right or if something is missing on the transactions. So that answered the question.
Yeah, exactly. It's hard, but it's, yeah, I don't know if it's ever going to be perfect. And that's why also when you look at like SEC financials that have been audited and stuff, sometimes they make adjustments, and they have things that they've made adjustments for in previous periods because they didn't catch it. and then they had to make adjustments for it, and then yeah, there's a lot of changes that go on, but depending on what company you're working with, most small businesses just do it for tax purposes, and you just have to prepare it for taxes. And that's what the end result would be, is having your financials ready for taxes, and that's all governed by tax law. But
Okay.
who knows where all you guys will end up.
That's true.
I have a question back on the budget, or the proposed budget.
Yeah.
And sorry, I was a little bit late, so maybe you covered it. But do we adjust any fixed numbers like the rent? You know, the rent is higher than in the proposed budget than it's going to be, because it's, you know, a set amount every month, and the bank charge. So we did that in Excel, and we times it by the percentage of the regular, but when we take it back into QuickBooks to set up the budget, do we change that?
So that is a great question. The solution and the key that I have just takes it by percentage. So the assumption is, as you grow, eventually you're going to have to pay more for the rent. So that budget is eventually going to grow. However, for July, you know, you wouldn't have that assumption just because it's a month out. We know what our lease would be a month out. But for the assignment, just take it by the percentages.
Okay.
And that's what I'm going to be reviewing it against, or reviewing the key. But yeah, in reality, that's a great point, that you're not going to really increase rent. That would be like a tiered budget, right? Where you'd have a certain amount, and then you're going to reach your breaking point, and then you're going to increase it at that point. But it's not going to, you know, it'll be a stepped, or it won't be a true variable cost to our sales. But for this purpose, for our budget purpose, yeah, just use that percentage of income method.
All right.
And
did
yeah, long term, if you think about it, like that percentage of income would essentially create that, I guess, buffer zone until you actually have to increase your warehouse or that rent expense, and it would like double or triple. So you have that buffer built into your budget to account for it, up to that point where you actually have to double or triple that rent expense.
Okay.
In that method. Yeah.
Am I interrupting any other questions, or should I ask my next one?
Yeah, just go for it.
Okay. This is in July's PDF. It's page 396. It talks about preparing the salvage value of their new vehicle that they bought.
The salvage value of 2,500. Anticipate a 5-year life with a salvage value of 2,500. Yes.
So my main question too is, the previous memo says they won't pick up the truck till the 31st. So the depreciation wouldn't actually happen till like next month, right? So would we make an entry, or do we just make sure the accounts are set up to add something to?
Let's see, please prepare a check for Frankums. So you have to actually do the bill, right?
It's
a take delivery of the truck on the 31st. Yeah.
Prepare a check, and then the appropriate delivery. Which also, could we take a look at the depreciation schedules, because it's been a while since I had that first accounting class. And I'm a little confused why they're splitting the first and last year 50% on there.
Yeah, we can do that. Give me, so for the truck, I just went down to the balance sheet to see what they did. So my initial thought would be just create the bill, book the asset. It's going to be there on the 31st. It's 1 day, but it's still 1 day. And whether we do a full month or just do it 1 day depends on our depends on how we do our accounting. But for the assignment, we're just gonna follow what this shows. And we have a truck of 48,000, so that's the 2 trucks, right?
Mhm.
Because in June we only had, let me see here. In June we only had 17,000 on our books for the truck, so that truck is now on there as an asset. And then the question is that in accounts payable? No. And
Oh,
it
no, my
kinda-
question is, yeah, do we add the depreciation? Do we do this memo here with the salvage value?
of the 2,500.
Yeah, do we go ahead and figure out the straight line depreciation for it? Because we don't have this schedule, right?
I'm not sure. Let's look at what I've posted and what I haven't. Give me a second. File.
I saw the one for the first truck, but this truck is more expensive and there's not a schedule for that I could see. So I
Building
guess they
equipment.
want us to calculate it ourselves.
It's either they want you to calculate it or I didn't post it. I thought I posted all of it. Let me see this one. No, that's the one that you already have. Yeah, the only depreciation schedule I have is the 17,200. So you can take that kind of format and do the depreciation schedule for the new truck. So you'd have your purchase price, your salvage title, your fund of usefulness, and then the useful life, and then the straight line method. So yes, you create your own depreciation schedule for this. And then trying to think, because there's 1,500 of accumulated depreciation. And for the old truck, you have 1,500 for the full year. And then whatever the new one would be. So you'd have to kind of back into your depreciation schedule for July. Let me see. Because you have your depreciation expense of 17,375. So we have to essentially match this 17,375, right? So we'd have to back in what we're doing for the old truck or the initial truck, and then your building depreciation, and what else do we have in depreciation? Equipment depreciation and software depreciation. So you're gonna have to back in and find if you're gonna depreciate the second truck or not.
Okay. And then that's where it gets into that other question on the actual schedule. Can you pull that up so we can look at that?
Yeah, I have that right here.
Can you help me remember why it in the first year it says 50% and year 6 is 50%? Instead
Well,
of
I
just
believe
dividing it by 5.
Yeah, I believe we bought it in June or a different line, right? When did we buy this truck?
Oh, okay. I can't remember right off, but that has to do with the how much of the year you have left then. Or
Exactly, yeah.
okay.
Yeah, let me see here. Because in May, yeah, I think in May we still had accounts payable for the truck. In May, but we didn't purchase the truck. Or did we purchase the truck? When did we purchase the truck? Was it in June or May? But according to this schedule, we essentially only had it for half the year.
So on the truck number 2, it might say like 40% there on year 1 or
Yes.
okay.
Yeah, that would
Okay.
make sense. And then year 6 would be 60%.
Okay. So
That's
we come
the
up with the
5-year total.
schedule. We come up with the schedule and then we back into the numbers to see if our number matches what's listed. Yeah.
Yes, that's what I would do. Because otherwise I don't have that schedule. I have the building and stacker and the initial truck in my documents. And the amortization scrolls for the loans. But I don't have any new one that was given to me for that new truck.
Okay. I almost feel like they want to practice or make us practice putting that together.
Yes, and I can see it. Yeah, I agree with that.
And then one last question has to do with the internet customer. And this, I guess that goes back to June again. But so I opened up the price rules and then I've been adding the internet customers under the Priceline page. But is there an easier way to do that?
What do you mean by their Priceline page?
Well, okay, so let's see. Well, can you go to list and then under all lists, it goes to that. Right, it's where you can edit your Priceline. And then there's add customer. So I've been adding the customers through there so I can pick up the right prices. But I didn't know if there's some setting or something that I'm missing so that I don't have to keep going back to that page to add a customer.
So I'm showing here like sales by customer. And I think like some of these Sue, Meredith, Susan, these are actual internet sales, right?
Yes. So when you have an internet customer, then, I mean, you add them, you put in their name or whatever, and you go across and you can tab down and you have 2 prices there. Well, so that you don't have to tab on the internet price every time. Is there a way to have a setup where it will just pull up the internet price without tabbing to the correct one? Does that make sense?
I'm not following in completely.
Okay.
So let me get to what you're looking at. Where am I sharing? Stop share. Let me find. I pulled up your. Now I broke my web browser. So give me a
Uh-oh.
second. Okay. So show me what you're talking about, and I'll say yes or no. There's an easier way.
Okay. So let's see. Let me go to something in. All right. So, well, like page 394, go to sales receipt, a new sales receipt.
Sales receipt. Okay.
Where we do the internet customers, right? And so Sherry Lomax, for example, page 394. I went ahead, let's see, is she on there? Maybe she's not getting in there yet.
Page 394. Is that in July, page 394?
Yes, July 3rd.
Okay. Let me pull this up. So we're on the same page. Literally on the same page. Okay.
Okay, so do I
Sherry.
have her as a, all right, got
Yep,
her.
you have her as a customer.
All right, so when she comes up and I enter a product, say the rain jacket.
All right.
Okay, it automatically brings up 104. And that's the internet retail. Because I have her already as, she's on the list as an internet customer. The only way I
Okay.
can get her there is if I go to that, the price list and add her ahead of time.
Got it.
Otherwise, I'm just tabbing across and clicking on the right price on that page.
So if we did a sales receipt and we put, and you would add a new customer, you come in here and add all that information, notes, payments,
Yes.
and
So
you
my
go
customer,
here.
oh, I don't have, when I hit customer type, are you still on mine?
Yes.
Half the time when I hit that, internet customer doesn't show up. That's weird. Well, let's see. That is weird. I've tried that a number of times. Oh, so you didn't actually put a name in.
I didn't
see.
put a name in. So I wonder if you put a company display name instead of, like if I did Sherry here, I don't know, Sherry Lomax again.
Oh, that's
That
probably what it
changes
is.
things. No, I still should have an internet customer.
Okay. What? So if you do a company, I guess I haven't even been putting in that top line. I've just been going right to where it takes me on that first cursor. It jumps to customer display, the second line.
Yeah, right here. And I wonder if that negates your options. No, it's still.
Well, actually, I think okay. Let me jump down to somebody I probably haven't added yet. Let's see.
Yeah, and I'm not sure if just having, if you just put internet customer, if it will default your price list. Yes, I want to leave without saving.
I'll find one now. Let's see.
Let's see, internet.
I think I went down to the car.
I went to page 433. Have you done Brianna?
I
You have done Brianna.
I stopped
You're
adding them
too
at one
good.
point.
John Sturman. So this is a new one, page 446. John Sturman,
Oh, okay.
internet sales memo.
Yeah.
So let's
see what-
see if what happens when I add John Sturman. Oh, wait, that's not his second first name. Sturman. And then, oh, that's just his address. We have the route 17. Is that normal for Montana to just have a route? I
Yeah,
don't
there's some
know.
different addresses.
And then if we do select type and we do enter a customer,
Oh, that's weird.
as of,
I could not get that internet. Okay, one more thing. Go up and just go to the second line on the name. See what happens. Because that's the way I've been entering all of them. Because my cursor just goes right to right there. Yeah.
right,
And erase that top line. So weird that, because I would like go to that and drop down and nothing.
and sometimes this might be, isn't expanded, so you wouldn't see it, but I'm
Oh,
not,
well, I
yeah,
did see customer options. I've seen that before and I clicked on it and I couldn't, there was no drop down available for me.
yeah.
Did it work for you just now?
It did work for me just now. But again, I don't know if this is gonna populate our price list based on this,
Mm,
but we can try. Let's see what we can do on this internet sales memo. So we have everything populated. Notes. So yeah, for internet sales, it's okay to not have notes. Terms due upon receipt, because it's just internet.
mm.
Hit save.
Yeah, that's weird. Well, maybe it's a glitch somehow with my computer because there was never a drop down. I would even type in internet customer under customer type and it wouldn't keep it.
Yeah. Are you using Chrome as your browser?
Yes.
Chrome's usually the best. I'm using Safari. Default internet retail.
Oh, so it didn't populate it like I thought. Anyway.
Yeah, it doesn't populate it automatically. You still have to get the rate to internet retail
Okay.
here.
Well,
But it is nice that it has that drop down to show you what the internet retail is, as opposed
yeah.
to, you know,
So what I have done then is I went in and entered these internet customers where we created the price list because there's a customer list. And then when I bring them up, it does populate just the internet price.
got it.
But I just didn't know if there was something I was missing.
And I think we want to do sales as is here, right?
Yes.
And not part of.
Yeah,
Oh,
that's
okay.
what
They
I
don't
did.
have it, right? Okay. MasterCard, credit card on the 23rd. I'm gonna populate this. So if you go in and do it and you're over by 846, you know why,
Gotcha.
or at least you may know why.
Yeah,
Saving
that
close.
sounds good.
Okay.
All right.
Yeah,
Well,
maybe try it again and see if, you know, see if it works or doesn't work for you. Maybe it's my accountant access. Sometimes it's depending on how people set up their system, but you haven't had issues in the past, so I don't think yours is set up any different than mine, but
Okay. Well, thank you. I think those are all my questions.
all right. And I think Magna took off. She messaged me and she says, yeah, and then I'll post the video and we'll be good.
Great.
Okay, well, thank you, Melanie. Thanks for attending. I appreciate the question. I appreciate the effort you're putting in, as well as the rest of the class too. I know it's not easy, but I think a lot of the time that you take to research and, you know, figure it out yourself and play with stuff, I think it sticks, at least for me, it sticks in my mind a lot more than just mimicking and copying someone. So
Yeah, well, thank you. I thought the budget projection was really interesting. I thought that was cool that you could take that over to Excel and do that. That's it.
yeah, yep. And I do that all the time, especially with some of my clients where they don't understand like just the financials, and you put it into a different format and you kind of expand it and you like show them and walk them through. It helps a lot. So
Great.
it's good.
All right. Well, thank you very much.